We welcome you into another week, another edition of Scrushy on Business. We're here to guide you through the process of building your dream, starting your dream, or growing your dream. And we do that with Richard Scrushy. Richard, how are you doing this week?
Well, we're doing pretty good. We had a little bit of a cold spell and that's kind of moved on. How y'all doing up there in St. Louis?
We had a 50-degree day yesterday, but today the wind is whipping, as they say. It is, we're getting ready for another cold front to come through, but everything else is well. Of course, we're gearing up for the holiday season. I'm in advertising sales. That's mainly what I do, Richard. And,
Mhm.
I call this time of the year the get back to me after the holidays, because that's what you hear from a lot of people.
Oh, boy, I can tell you that. It's like the business kind of shuts down when you start getting into this week. As a matter of fact, this weekend and probably next week, it's going to be impossible to get people on the phone. It's going to be impossible to get people to sit and talk to you about anything because they're really thinking about this time of year, family and getting Christmas presents. And, the traffic is already building out here. I mean, there's so much traffic, you can't even go to the grocery store. I mean, it's bad. People rushing around trying to get everything done so they can be home with the family. And I don't blame them. It's a great time of the year, a great opportunity to come together as family and friends and really just celebrate the year, get ready for the new year, right?
That's it. And in business, there's still a lot of things happening because deals don't stop, right? The communication, if things are going, and you've been kind of reading up on some things, some action that's been happening in the business community, and noticing a similar trend with a lot of those companies.
Yeah, yeah. I've just really been studying the transactions, the venture capital transactions that have been taking place, and how big and whatnot. I was reading recently in the top 100 deals, which is just full of all kind of AI deals, is now valued in excess of $3 trillion. I mean, we're in different times now. Matter of fact, I was looking at OpenAI, for example. Valuation on OpenAI is $300 billion. That's the current valuation. And they raised $40 billion in funding. Now think about something. And again, I don't know the exact timing of when the value and the money came in and whatnot, but to put $40 billion in, and so if you took a percentage, of what percent is 40 billion of 300 billion? I mean, they put 40 billion in and they got less than 15% of the company. What is that? 9, 10%. I mean, that's incredible. You see what I'm saying?
It's
So
unbelievable.
yeah, these things are different now. I mean, it's just so different. SpaceX is now valued at 137 billion. Matter of fact, SpaceX is the most valuable private company globally, and from a private standpoint, and that's just incredible. Uh, so lots of deals are being done. I looked at a deal, and matter of fact, I talked to the guy raising the money on a deal. I heard about it. I knew the business. I knew the company. I knew the people. I didn't necessarily know the people, but I knew about the company. But I knew one of the people that are dealing with the folks raising the money. And so they were talking to me on the phone. I was just chatting with them because I'm curious about all these things. And they were telling me that they were raising $10 million for this company. So I said, well, can I talk to the guy raising the money? That's just how I work, because we've got a podcast and I want to know what's going on out there, right? And if I'm going to get on here and I'm going to talk, and you and I are going to talk about business and raising money and do different things, we should be current and know what's going on out there. Well, this particular fund is putting $10 million in a company that did $50 million last year. Okay, and it's a private deal. They're bringing in and to help the company. The company, by the way, and Dave, we're in times that are crazy. It's a biological company, and it's not profitable. Okay, they did a little over 50 million last year. They're not profitable. But this company believes they're going to be profitable. Matter of fact, when I was talking to the guy, he asked me, "What do you think?" And I said, "Well, I am familiar with the product because I had done a little study on the product.
Right.
I knew some folks that had used the product, so that was really my interest as well. And I heard excellent things about the product. So I was encouraged. So I told the guy, I said, well, I can tell you this, it's a good product. At least that's what I've been told. And he said, well, we think it's a fair valuation. They started out to raise 7 million and it ended up they're going to be able to raise 10 million. That was the level of interest. So, I guess what I'm trying to say is that to me, what that says is that the venture capital market for certain things is still very healthy, and deals can get done and they're being done. But to think about, I pulled up and I looked at like the last 100 deals that were big deals that were done again. And I went through each one of them. I started going through them. I didn't look at them all in detail, but I looked at a lot of them. And again, that totaled up with a valuation of over $3 trillion.
Mm.
And that was once the money was put in. That was the valuation. In other words, let me try to explain this for our listeners out there so they understand it. Let's say that your company, for some reason, the concept, the potential sales, the leadership, the market, the niche, everything is considered. And let's say the investors come back and they say, your company is worth $100 million. That's the valuation we're going to put on it. And we're going to put $10 million into it. Okay. Well, they just bought 10% of your company. That's how that works. I mean, it's just simple mathematics. So if that's the valuation, and then they'll say, well, that's pre. Well, post is going to be 110 million post valuation. So you got to add the money they put in to what the current value. Now you put another 10 million in, it's worth 110 million. And so then the question is, now where do we go with that? Okay, so we put 10 million in. What is that 10 million going to do? And that's the real question. And so the entrepreneur, the CEO, the leadership of that company has to be able to say to that investor, you put that 10 million in here, and that's going to take us from being $100 million company to being a $500 million company. And so then that guy says, well, I'm going to have 10% of 100 million. So 10% of 500 million is 50 million. So I made 5 times my money. So he thinks I need to be in this deal. Now here's the question: in the due diligence process, they have to prove to him that they can get to that 500 million and how they're going to get there. So what's the roadmap? What are the milestones? What is the roadmap? How are you going to achieve that? What's it going to take to get there? And then here's the really big question: are you going to need to raise more money?
Right.
Because if you got to raise more money, then we're going to take dilution. So let's say that 10 million got them to 250 or 300 million, and then they got to raise another 10 or another 20 million. Well, then that guy gets diluted down. So he doesn't quite get his 5 times return unless he buys into that next round. And what they do a lot of times is they say, they have a right and a piggyback right, or a right to be able to maintain their percent ownership. So they might say, I get to keep my 10%. So as they raise another 20 million or 10 million or whatever, he gets to keep his 10%. But he has to buy to keep it. Now,
Right.
sometimes there are venture capital firms that will say, I want to lock down my 10%. So in the future, no matter how much money you raise, I'm still going to keep my 10%. Well, that makes life very difficult for the company, because now they're out there trying to raise money. They hit a point where they got to raise more money to continue to grow. And that's not a bad thing. Raising money to continue to grow is not a bad thing. It can be a good thing, because it might take it from a 500 million to $1 billion. Okay. And you do have to raise money to grow and to buy other companies and to do things like that. That's just part of life. And so when you have a investor that locks in and says, well, I'm not going to take any dilution. That's what they have what's called an anti-dilution clause in their investment agreement. Can't dilute me no matter how much money you raise. Well, that's just not going to work. And let me tell you where it really gets to be a problem: if you try to take the company public. Because if you go out and you say, well, we're going to raise $40 million or $50 million in the public market, and of course everybody takes dilution on that. And so if they have an anti-dilution clause in there, then that creates a little bit of a problem. I
Yeah.
don't want to get hung up on that. But anyways, valuation is driven by a whole series of things. Back in the days when I was coming along, it was pretty simple. It was like, okay, what's your profit? What's your EBITDA? Your earnings before taxes, interest, depreciation, and amortization. Okay, what is that? because that's your cash flow. Okay, that's prior to paying your taxes. That's prior to, any depreciation or amortization of anything. So that's real cash flow. Okay, so from operations, so they would pay a multiple on that, and that multiple was how they valued the company. They'd say,
Right.
okay, we're going to pay 10 times your EBITDA, or 5 times your EBITDA, or 3 times, whatever it is, depending on the industry. Now, keep in mind, every industry is different. And that's one of the things we talked about on one of our shows. We said, look, go look at the airplane industry. Look at Delta Airlines, Southwest, United, all those companies, and look at what their price to earnings ratio is, which is the same basic calculation. It's the multiple times earnings. Okay. So, look at that, and then go over and look at the hotel industry, and pick out, Hilton and Marriott and 3 or 4 others, and see what their multiple, what their PEs are, what do they trade at. So, public companies trade at a much higher multiple. Okay, and they do that because of the liquidity, because you can buy and sell the stock, you can get in and get out. Private companies sell at much lower. So typically you're going to see a private company in a 3 to 6 range, and truthfully, that's where most of them in. So if you're out raising money and you're a public company, you may be trading at 15 to 20 times your earnings. As a private company, you're out raising money, you might be looking at 3 to 6 times. Now, that's going to determine the valuation. And that's the way it was in the early days. But now you get into these biologic companies and these AI companies, and they don't pay any attention to EBITDA or profits or anything. They're saying this thing could be a
There
billion
aren't
dollars.
any.
Yeah, they're not any. Matter of fact, I was looking at something that really was fascinating to me. Um, this company, Databricks, the CEO said that his company would be worth $1 trillion. And he said, there are going to be 3 things that are going to drive that growth. He said the trifecta of growth, he called it. And his name is Ali, looks like Ghodsi, Ghodsi is his name. I'm not 100% sure how he pronounces it. But anyways, he says the trifecta of growth will create his value of $1 trillion. And here's 3 things he says will do that. He's in the transactional database business, and he said that growth in that transactional database market is going to drive it. And he has a platform called Lakebase that is their new product. And he made the comment in an article that I read that Oracle hadn't changed in 40 years. Larry Ellison's big company, Oracle. Larry Ellison's one
Hmm.
of the richest men in the world. I know Larry personally. I've spent time around him, been to his home. He and I, both were pilots. We both were single pilot rated in the Citation jets, so we had something kind of in common. I talked to him a lot about building the first digital hospital, fully paperless hospital back in actually in 2000. And so, we're 25 years out now, and we still don't have a fully digital hospital, which I had hoped that I'd have the opportunity to do that. And who knows, maybe that'll happen one day for me. But then he says the second thing is his business called Agent Bricks, and he says that's going to drive. That's his second thing, and that has to do with his uh, platform. Databricks is a platform for building AI agents that work with proprietary enterprise data. And so this gets pretty complex, but he says
Yep.
that's going to play a major role in his ability to be able to become $1 trillion company. And then he says number 3, he said that it involves building applications on top of this infrastructure with developers using AI tools to quickly build applications that run on this lake-based platform that he has, which are powered by AI agents. So he says to get the trifecta is also to have apps on top of this. And he said now you have to have apps that are vibe coded with the database, lake base, and with agents. And he said there are 3 new vectors for us in that area. And I could go on and on and on, but this is a whole nother language here. This is a whole
Yes.
nother thing. And so when we start looking at these at valuation, let's say you're going out here and you're going to build a company that uh, just take healthcare. Let's say you're going to be doing some very innovative healthcare, home healthcare therapy treatment, maybe in the wound care area, maybe in the, palliative care or something. I don't know. But anyways, you're not going to get the kind of valuation that these guys are going to get with this new creation of AI and all these different things. But what was really interesting to me is that it looks like to me, Dave, and I'm interested in your thoughts on this, like the space may be getting crowded. Because when I looked at that 100 companies, probably a third of them were focused on AI technology.
Yeah, and there's all kinds of issues, obviously, that come up with that of, storage and water of all things that I don't think people were thinking about when it first came out. But yeah, it's a lot of copycat, right? A lot of people jumping in to be now specialized in AI in certain categories, and it's not going to surprise me to see a massive growth of businesses using AI. How much of it will be noticeable to the consumer on the other side? Well, that's to be determined. But, I had a conversation with somebody the other day about a self-driving car. We're getting Waymo here in St. Louis. And so you can, it's essentially an Uber without a driver. And somebody was saying, that makes me nervous to not have that. And then as you start to really dive into it, the instincts of the driver, quote unquote, the computer, are most likely, we can all agree, going to be better at most times than a human driver, right? A human driver gets tired.
Mm-hmm.
An AI driver does not, right?
But yeah,
A human driver has blind spots in the vehicle. The AI driver does not, right? There's all these things that you start thinking about it and you're like, hmm. Now, obviously, with any sort of transportation, you're going to have at some point some things that happen that aren't good, and then that's going to become the big topic, right? The Waymo car ran into a pole or ran into a person, just like a car would.
yep,
But
yep.
the AI version of it, whether it's in healthcare, transportation, media, it's just determining to what level, right?
Hey, Dave, look, hey, this morning I'm driving down the road to my house. Okay. I'd been to the gym, worked out, and I was coming back, and I met a guy in one of the Tesla trucks,
Yep.
and he's reading the paper. And I'm like this. And so I passed him. He had the paper, he was reading the paper, and I went by him. I was like, "What in the world?" Our paper ran last night, and so the local neighborhood paper, and so he's reading the paper. I
I'm
mean,
sure that's exactly what it's meant to be. Meant to
yeah,
be.
and
I'd
so
like,
I'm thinking, yeah. So this is where it's headed. And what's going to, let me tell you, my wife's car, I don't think you can run into anything. It stops. I mean, if somebody's coming by you and you're backing out, it'll slam on brakes. It won't let you
yes.
do anything. I mean, it's just crazy protective. And again, like you just said, many a time I'm sure she would have backed into something, but that car will not let it happen. And that's what you're talking about
That's
with
it.
all the different eyes around it and all the different cameras, and it senses so many different things. So yeah, I don't know. What was your point there? I guess is that we're moving into a whole new age where
That's it.
we're going to have to trust AI.
Embrace it. You're going to have to figure out it can help you. There is no doubt 100% if you are a business owner, AI can help you. The question is, what do you choose to use it for? And how much of that, as I said, is customer facing as opposed to things that can help you with marketing, things that can help you with back office type of things that you can use AI for. Some people use AI, they don't even know that they're using AI because they're using an app and they call it something else, not realizing that that is absolutely artificial intelligence that is being involved. But one of the other topics we wanted to talk about this week is really, kind of taking a complete U-turn from where we just were, because we get a lot of questions, Richard, to the email info@scrushionbusiness.com that talk about startups, brand new companies that are first getting started. And there are so many things that as a business owner you have to be aware of. We talked about this once before in terms of, from everything from the very beginning. What's the business called? What does the logo look like? What is the URL? right, of that business, there are a lot of things that business owner has to think about before they ever officially become a business.
Oh gosh, yeah. Yeah, and that's so important. And if I was to say, about maybe 9 or 10 things that I would suggest to anybody that wants to start a business to think about. But first of all, just real quick, traits of a of the entrepreneur. So if you're out there and you're saying, "Well, I'm an entrepreneur. I believe I'm an entrepreneur." Here's a few things that you may want to just throw in and think about. Here's some of the research that says this. Curiosity. Most entrepreneurs are curious. Okay, so and even Albert Einstein, he made the comment that he didn't have any special talents. He says, "But I am passionately curious." So being curious and thinking about things, okay? Awareness, being aware of things. So being constantly aware of, how to make it better, how to improve it. Should I do this? Should I do that? Can we add this on? Can we add that on? Should we do this, not do that? And those things. And then, of course, persistent. You got to be, you really got to be persistent to be successful. And we go back to our buddy, Bill Matovich,
Hmm.
built his company, persistence. We go back to Hunter Carr, talk about him. We talk about Lamont West, who was on our show. These guys were all persistent in building their businesses. Adaptivity. You have to adapt to things. You may find yourself in a situation where you have never done this, but yet you're going to have to do that. And because this may be your customer, different types of customers and different situations. So you got to do that, but you have to be creative also. So that's another real skill. Are you creative? I mean, I think sometimes people get into a rut. And what really concerns me, and I've noticed this, and I got to tell you this, I have friends that are totally connected to Netflix episodes, and that's all they do on weekends at night. So when it's like, don't call me. I'm watching such and such tonight. I'm in my fifth episode, and I got to see the next one. So, and they dial out of the business world, and they're not. So if you're and I almost got caught into some of that. I got caught. I found myself, wanting to watch a certain episode after episode after episode, and I think COVID put us into a lot of that back when we couldn't go anywhere or do anything. But the problem with that is if you have entrepreneurial skills and you have the ability to be creative, and you get all wrapped up in things that just, what was it that Warren Buffett said? He said he talked about poor people have big TVs,
Right.
and so we get focused on that rather than focused on our family, building our businesses and whatnot. So if you really want to be an entrepreneur, you're gonna have to have some time where you have free time to be creative and think and not be thinking about a whole bunch of other things. And you have to have some leadership skills typically. Now there are entrepreneurs that that are visionaries, and some of them have good leadership skills and some of them don't. But this is something that you really need. Leadership skills in building a company are important. I mean, we have seen people create concepts, and we go back to McDonald's. Ray Goff, what did he do? He didn't create McDonald's, but he had leadership skills to take it and turn it into 36,000 restaurants around the world. So, but he wasn't the founder, original founder. He's the founder of McDonald's, but he wasn't the founder of that single restaurant that he bought from those McDonald brothers. And so that's important. And then last of all, we know that an entrepreneur takes the risk and he doesn't have a fear, so he's got to have courage. So if you don't have fear, that I call that courage. And that's so that's pretty typical. So now let's just jump on real quick things that you'd want to think through if you were going to start a business. Research your idea. You got an idea, you got a product, you got a market. Who's your audience? Who's going to buy the product? You got to know all of that, and bounce it off of people that you think might be smarter than you. I always did that. I always try to find people that that would be honest with me. It's like a friend of mine said, a real good friend will tell you when your breath stinks. And that's what you need to know. People that don't like you, they ain't going to tell you that. So you're going to have to think about if you're building a product business, you know, how you sourcing the products and vendors and things like that, and cost associated with those kind of things. Those are all real important. And then of course drafting a plan. You got to you have to have a plan, and then you got to work your plan. But if you don't, and this happens to me. I'll have people tell me, I want to do this, and this, and I say, can you put it in writing? Can you put it in a business plan? Now, what's scary today is that you just tell AI, you know, I want to do this, write me a business plan, and it'll give you one, right? And it's not really who you are, and it's not really your commitment, and it's not really your understanding. And so you really need to test yourself and think yourself outside of AI. We got to learn to think outside of AI. We got to think, okay, so if I'm going to build this business, how do I think it ought to be done? I don't need to ask AI. AI is going to tell you, and it might be telling you wrong, by the way. I mean, you might not be able to achieve what AI tells you. But then another thing that we talked about, Dave, which is important, is naming your company, right? I mean, look, there's some great names out there, and there's some bad names. You can put a bad name on it, and people don't want to now pronounce it. I always like maybe one or two syllables. You know, if you make it too long, too big, it's difficult. And so you know you see some of the great companies in America have names that tell you know that are easy to pronounce or catchy or explain who we really are. So if you're looking for that kind of business, you can find it through their name. Uh, so your name is going to be important for many reasons, and so you got to work through that. And then of course the structure, depending on whether you're a sales company, a product company, a service company, you know, what are you? A consulting company? But you're going to structure the company based on who you really are and what you are. And then that's going to build, you know, you're going to have to build that out. So structure and organizational structure of, you know, from top down to bottom to whoever's doing the work, and you got to have a plan. And every venture capital deal I've ever looked at, one of the most important things from raising money, even when you go to a banker, is who's running it. Who's going to run the company? Who's going to do the sales? Who's going to do the financing? Who's going to do the you know this and that? And they name all the different things. And you better have who's your in business development, you know. So I found that in raising money on all the different companies that I had invested in my past, I wanted to have all the shoes filled out. This person's this and this person's that. And so I wanted to look at the resumes. I wanted to say, oh, okay, well, you've got experience doing that. And you know, I had a call this morning, and you caught the tail end. I had somebody called and asked me about a guy they wanted to hire to run one of their companies they're buying, and I knew the guy, so I had to give him a reference, and you know, and it just so happened I knew him, and I even knew his parents, and I was able to give him a very good and positive reference because I know the guy has great capability, and they questioned his even some of his schooling, you know. I mean, the guy obviously is very capable, but you know that's a smart investor.
Right.
He asked all the right questions, so you should expect that. You don't need to get mad at them; they're just trying to make sure that they don't make a bad investment.
That's it.
So you got that. You got your funding, and then how you going to fund it, and who's going to help you with that, and then something that a lot of people miss is brand strategy. Brand strategy. You're going to be faced with that now because of websites. You got to have a website. You got to have a brand. You got to have a name. You got to have a presence. And you got to work that strategy with social media and everything else. And so your marketing department, what used to be hiring a few salesmen to go out and sell your business, and it was face to face. It's a totally different world out there now. You got to, if you don't have a good website, you're not going to get any business because people first thing they're going to do is click your website, right?
Absolutely. That's your storefront now, is the digital footprint with your URL, the way your website looks, social media, right? All so important these days. You know, how you present your business, how you present your overall marketing strategy, which is, you know, something a lot of people try to get away without. These days more than ever, that all has to be planned out in advance.
Even down to the detail of your logo. I mean, even our logo that you can see on the screen now, Scrushy on Business, we went around and around about how that was going to be. I mean, because we had to think through that, and everybody does. And then so you're going to be asked, what is your marketing plan? So you might as well go ahead and have one. How am I going to sell this product? How am I going to sell this service? How am I going to build this business? How's it going to work? These are all things that are very, very, very important. And today, raising money, it really, I mean, you've got a lot of smart investors out there, and you depending on what your business is. I mean, if it's a business that is, like I said, a biologics, a pharmaceutical, a new product, maybe it might be that you're going to lose money for 2 or 3 years, but you still can raise money if you can show them, that you're going to have a huge, a platform, and this thing is going to build out and going to be, multi hundreds of millions of dollars or billions of dollars. It once it has traction, but we're going to have to invest in it to get it to the point that we can have traction. The investors will buy into that, especially if it's something new. And of course, right now, like I said, they're all tied into AI and all these AI inventions and new products and the use of it and how. Look, the whole robotic industry is now AI is just going to be huge, and in industry, we're going to see more and more robotic workers and less humans in there. It's really going to happen because it's easier, and they work 24 hours a day and they never stop, and they don't have to have insurance and they don't complain, and so all of that's going to drive that industry. Anything that can be robotic, where they can use robotic technology to do the work. I think we're going to see more. Don't you think, Dave? I mean,
No
why would?
doubt. No
Yeah,
doubt. It's all going to be about,
yeah,
spending less time doing things that, something that's automated will be able to do for you. And along those lines, I want to tell everyone about
yeah.
a supporter of our show, Northwest Registered Agent. Build your complete business identity in just 10 clicks and 10 minutes, right? You want it to be fairly simple. When you want more, start your business with Northwest Registered Agent. Everything you need to launch and protect your business all in one place. Northwest Registered Agent has been helping entrepreneurs launch and grow businesses for nearly 30 years. In fact, they're the largest registered agent and LLC service in the U.S. with over 1,500 corporate guides, real people who know your local laws and can help you and your business every step of the way, which is perfect for our topic today of getting started and being prepared. You can build your identity fast for just $39 plus state fees. You can get an LLC, a domain name, business email, local phone number, a business address, a registered agent, and compliance. And again, we're talking 10 clicks and 10 minutes. Protect your identity. Keep your home address private by using Northwest's address on your state's formation documents. So many things that you can get help with from experts with decades of experience. Don't wait. Protect your privacy, build your brand, and get your complete business identity in just 10 clicks and 10 minutes. Visit northwestregisteredagent.com/paid Scrushy and start building something amazing. Get more with Northwest Registered Agent. Again, that web address, northwestregisteredagent.com/paid Scrushy. And Richard, we thank them for sponsoring our show this week. We want to get to some questions that we have from some of our listeners, like Ryan in Cleveland, who wrote in and asked, Richard, what daily habits or routines helped you stay sharp? I know we've talked about this once before, but remind everyone, as you mentioned earlier today, you were on the treadmill first thing. You like to get that blood flowing.
Every morning. I actually do it 7 days a week. And when I go out of town and visit family and whatnot, it kills me if I can't get to the gym. I try to find a place, and then, if I can, I'll just get out and walk. But yeah, I think it gets your mind going. I think it gets your blood flowing, and also you're healthier. I believe it. You know, there are a lot of people that are my age that are not very healthy. I run into them all the time, and I've lost a lot of my friends, especially over the last few years, that were actually even younger than me. But for the last 45, 50 years, I've worked out every day of my life. If there's a gym, if I go on vacation in a hotel or whatever, I get up and get on the treadmill, and then I lift weights, and I try to stay healthy. And it's always hard too when you travel to eat the right foods, but I try to do that, and those things are important. But you know what? Other things that are important: routine. Keep up with what's going on in the world, and be knowledgeable enough of what's going on. And if I know that I'm going to meet with a guy who's and do some business, and he's a huge football fan for some college, I'll read up on their stats, and so when I get there, I can have a conversation with him and say, hey, how about those guys? How about those Texans or whoever it is, and be able to discuss it and talk about their quarterback and how he's paid a lot of money and these kind of things. You need to be able to have these conversations, but I try to keep up with what's going on in the world. I try to keep up with the markets. I try to study those things because those things influence business transactions. And I feel like we have a responsibility as a business podcast operation here to have that knowledge. And when people call me, because my phone rings all the time, I talk to people all the time about businesses and startup businesses. And I'll tell you, Dave, a lot of times I tell people I just don't think it's a good business. And I try to, some unfortunately, there are people that do have desire to build a business, and they want to build a business, but they don't have the skill set to determine exactly the right way to launch the business, or even the ideas. Sometimes it's just not that good. So I think it's healthy to try and keep your brain functioning really well, but at the same time, I think you got to be fairly well read. You got to know what's going on in the world. You got to understand the business world, but I think you also should take the time, and that's what I try to do, and that is to kind of study the markets and know where money is going and where they're putting the money and what are the valuations and new deals and new things that are coming out. So those are things that I do. And now, back when I was running the company, running every day, uh, I had all of my things that I had to look at. Monday I wanted to see a list of every facility that we had, and I wanted to know how many patients average per day, what the census were, and then I looked at collections. I wanted to make sure that they were collecting all the money and things. I had a whole litany of things that I looked at all week, and these were my routines. I would come in and I wanted to see this, 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 and this. And there were certain days and certain times where I said, okay, I have a lot of people wanting to meet with me. Well, Thursday, by the way, was my day. And my administrative assistant knew that. So they scheduled all of my appointments on Thursday. And then I spent those other 4 days working on the business. And that Thursday, it was meeting after meeting after meeting. And it ran kind of like a congressman's office. And I had people out there would come in and take notes, and I'd try to follow through with everything. But I set systems in place, and I put myself into a situation where I was able to be functional in running the business, but at the same time, I did all the things that you got to do to run a big business. And in the community, throughout the country, I had different people I had to talk to about different things, new concepts, new equipment, new technologies, and you just really have to stay on the forefront. And you have a responsibility to do that if you're in fact running a big company. So that's just a few of the things that you have to think about. But now,
Yeah,
I was looking at that question, which I wanted to, if you don't mind, can I jump to this one because I love that one, Alicia Green from Denver.
please.
Go ahead.
When structuring an acquisition, she asked, what's your advice for negotiating with an owner who's emotionally attached to the business?
That's really, uh, um, let me tell you, if they're not, then there's something wrong with the business. You know what I mean? Somebody that says, I just want out of here. Oh, you just want out.
Yeah,
Okay. Well, why do you think I want to buy it
that
when you're
should
trying to get away from it?
that should
You
have
know,
a light or an alarm go off.
little alarm goes off. You say, I just want out of here, man. I'm done with this. I've had it with this. And look, I've actually been in those meetings, and I would ask them, I'd say, tell me why, and of course they'd spill the beans, and then you're like, oh, okay, well, the price just went down. I mean, if you've
Right.
got these problems, I have no interest in taking those problems on. So first of all, before I buy it, you got to get rid of all of that. I'm not interested in buying into any of that. So, but you do have people that have good businesses that reach a point in their life where they have an illness in their family. For example, I had a one guy that I bought a business from, and he had brain cancer, and he knew he wasn't going to live forever, and so he told me, he said, look, I just want to get this done before I get too sick to do it. And I built this company, and I don't really even want to sell it, but I've got to take care of my family. So I sat down with him. He was very emotionally attached, and I said, let's go through everything that you want to get done and that we have to do to make you happy. And I went through it all, and we worked out every deal. And one of the things that the I'm just going to tell you this because it's kind of fun. His They had an airplane. Okay, the company did, but it wasn't a very good airplane. As a matter of fact, it was not even an airplane that I would have bought if I had the money to buy an airplane. Because I'm being a pilot, I'm fairly familiar with airplanes. But it was a jet, but it was not one that people bought, and they didn't make them anymore. And he said to me, he said, I want my wife to be able to have access to this jet for 3 years after you buy the company. So I had to agree to that. And so when we bought the company, the jet came with it, and we just hangared it. And when she wanted to go somewhere, she got on that jet and she flew it for 3 years. But that was there were two things that I had to do in that acquisition primarily to get that deal done, and that was a $1.7 billion transaction.
Oh, wow.
He wanted, and you see, so the jet was like a rounding area, wouldn't that be? I don't think the jet was worth $2 or $3 million, and we're doing a $1.7 billion deal. So and so I said, okay, we'll do that with the jet. What is the other one? He said, I want my wife to have those antique rugs in our lobby. And I said, well,
Hang on,
they're
let
her.
me think about it. Yes.
I said, those are hers. And it's amazing, but you got to find, what are the points that, and he lived about 6 months after we did the transaction, and we honored his everything, gave his wife the rugs, and then, she flew on the airplane for 3 years. And then after that, we sold the plane, and that was the end of that. But no, in talking with people, I used to sit down with them, and I knew that they were going to have, all kinds of second, re, you know, reactions that would come because they loved what they had built. They really didn't want to get rid of it, but they knew it was time. Either because they were, and some of them, these guys were just too old. They were old, and they wanted to get out. I mean, there was time for them to retire, and they knew that. And so, and here's the other thing too: there are markets where you feel like you've peaked, and people work real hard to build, and then they feel like, well, I've done all I can do. I just can't keep going it, and so they will have in their mind, I need to sell the business. I feel it's at the peak. Now, when I looked at it, I was saying, okay, this guy feels like it's at the peak. I'm going to agree with him, knowing that we're going to build our company on for the next 10 years. So, we would structure those deals, but I would try to allow them to work as a consultant,
Mm-hmm.
advisor. I would maybe pay them out their salary or for a period of time. And I did a lot of earnouts where I would say to them that you've got to achieve this level of income, and you achieve this level of income and we'll pay you a little earnout on it. So we did those kind of things that gave them comfort. Some people, Dave, I put on the board if I felt like they were of value and they would bring something to the table. Really smart people that could add value. I'd put a couple of them on our board, and that worked out. And it would just put them on for a year or two or something like that. I know we have another sponsor. Do you want to go ahead with that? Is it
Yeah, I
time?
can tell everybody about DraftKings. I've been uh tasting, I think they call it, maybe putting a little taste on, because it's new for us here in Missouri, Richard. But one touchdown can change everything: the crowd, the momentum, the game itself. It never gets old. You can feel that same rush with DraftKings Sportsbook, an official sports betting partner of the NFL. And if you're like me and in Missouri, listen up. DraftKings Sportsbook is now live here in the Show Me State. And the best part is new customers bet just $5 $5. And if your bet wins, you'll get $200 in bonus bets instantly. Download the DraftKings Sportsbook app. Use code Scrushy. That's code Scrushy, SCRUSHY. You bet $5 and get $200 in bonus bets if your bet wins. This is in partnership with DraftKings. The crown is yours. Gambling problem? Call 1-800-GAMBLER. In New York, call 877-8-HOPE-NY or text HOPE-NY. In Connecticut, help is available for problem gambling. Call 888-789-7777 or visit ccpg.org. Please play responsibly on behalf of Boot Hill Casino and Resort in Kansas. Pass-through of per-wager tax may apply in Illinois. 21 plus age and eligibility varies by jurisdiction. Void in Ontario. Restrictions apply. Bet must win to receive bonus bets which expire in 7 days. Minimum odds required. For additional terms and responsible gaming resources, see dkng.co/audio. Limited time offer. Richard, one more question I wanted to get to this week, but it's a really good one. This is from Andre in Detroit. And he said, after hearing a few of your guests, it seems like everybody's path is just a little bit different, but yet they all have a sense of purpose. How does an entrepreneur find that purpose when at first they're just trying to survive?
That's that's a great question. I think it probably is different for everybody, but yeah, that's it's I don't know how to say this, but if you really are truly an entrepreneur, okay, and you have a great vision, and let's just say it's given, and I believe God gives us vision, and you are just eaten up with it. I tell the story of the guy who was a dear friend of mine, him and his wife. They used to go out, my wife and I, when I was early on. I had the idea of starting HealthSouth, but I was working for another company, and we'd go to dinner, and I'd tell him about HealthSouth and what I wanted to do, and how I wanted to start it. And I would go out, every week. We went out Friday, Saturday night. They didn't have any children, and at that time I didn't have any children there living with us, and so we'd go out, and I would tell him. And so he one Saturday night we're having dinner at a Chinese restaurant, and he looked at me and he said, "Don't you ever tell me about this again unless you go start that business. I have had it with you. I come in here every Saturday night. You're eating up with this. Is all you want to talk about. This business, but you won't." So I knew then. And so I said, well, I've got to do it. I was so eaten up with it. He was right. And the desire was so great. I need to go ahead and do it. And, I had another job. So, yeah, I had to eat, and I had to fund my family. Unfortunately, that company was sold, and I exited that company with a nice pile of money because I had worked very, very hard, and I had stock options, stock in the company, and I'd made some nice bonuses, and I was able to leave with money and invest it in this thing that was inside of me that was eating me up, that I would have to tell everybody about every time I sat down and talked to them. And finally, this one guy just slapped me upside the head and said, either you're going to do it or don't talk to me about it. And he was a dear friend. Did you know? And I mentioned, I think on the show early on, that 5 years later, he was working for me. He left his job after we built the company, and he came to work for me, working with us. And he was a great guy, and I'm still friends with his wife. But here's another friend who's passed on. Uh, but yeah, so to answer the guy's question, how do you find that purpose when you're just trying to survive? It's in you, and it's there. If you can't find it and you don't have it, then you don't have it. I mean, even though I was out there working hard, I had a great job, but I traveled all over the country. I was running a $100 million division in a company in my late 20s, and I was traveling, flying everywhere every week and running that business, but I still had that inside of me, that purpose, that concept that I wanted to build this other company, and it was just growing inside of me. So when you're trying to survive, I guess you're saying, when you're just trying to make enough money to pay the bills, pay the rent, buy the groceries. Um, yeah, well, either you have it or you don't. And I don't know. I guess that's what they're asking. How do you read that question, Dave?
Yeah, I mean, I think it's, some people obviously go into it or start their business because of that purpose, right? So I think a lot of people have it before, it ever begins, right? You're starting a company and you want to donate certain parts of your earnings to charity, or, it may be any other type of purpose towards that business. In terms of finding it when you're getting started, a lot of it becomes about you, your family, and the families of your employees, right? And what you guys are going to build together. Because the first purpose has to be getting that dang business up and running. I mean, once you jump into it, you think having kids changes your life. Open a business, you know.
Yeah, and this guy, he says it. He says, if you're an entrepreneur, well, how do you know you're an entrepreneur? We talked about the traits of an entrepreneur. Do you have those traits? Are you willing to go out and take that risk? Do you have the courage to do that? And you know, you may have a desire to go do something, but have you checked it all out to make sure that it's something that would work and something that can be funded and something that would be profitable and make sense? So those are things that you got to go through. So, and you just have to make time. And with this other job, I had to make time. I put a business plan together while I was working a full-time job, and then I was able to, I told the story of me trying to hire somebody. I'm sitting in a restaurant having breakfast, and I'm in Greenway Plaza in Houston, Texas, and I'm at Stouffer's Plaza, and I'm telling this guy that what I plan to do, and I'm still working for the other company, and then the venture capitalist from Citicorp Venture Capital was sitting in that restaurant. He heard me telling the guy about what I was going to do, and he walked over and gave me a business card and said, "Hey, I'd like to put some money in your company. I just heard everything you just told this guy that you're trying to recruit." And next thing you know, I said, "Great." I called him. We set up a meeting, and sure enough, he was the first investor in our company. And he just heard me talking in a restaurant. Amazing. But that shows you that I had a good plan. I had a good plan. I had thought about it. I had structured it. And here I am recruiting a guy. I didn't even have them. I was going to put them, and I did. I put the money in myself. And so that's the thing, in HealthSouth, I put the money in. It wouldn't be a company today in Compass Health if Richard Scrushy had not had the vision and pulled the money out of his own pocket that he made off of that company when he was at LifeMark. When they sold that company, it wouldn't have happened. I mean, that was, and again, I was drafting that plan and put it all together and was recruiting while I was still working at the other company because I knew I was going to leave. But let me tell you, I was straight up with the leadership at LifeMark. I went to the CEO, the chairman of the board, and I told him what I was going to do and what I wanted to do. And he fully understood. And he said, I'll be an investor. I mean, I love it. I think that's great, Richard. Go make it happen. So I had the support, but I did it while I was working. So, there's if there's a will, there's a way. You've heard that many times, and I believe you'll find that way. So, to Andre Lewis, if you've got the will, brother, and you've got the desire,
Hmm.
you'll find a way. You'll
You
survive.
absolutely will.
Yep.
You will. That's a great place for us to end it this week. And we appreciate everybody tuning in. Of course, you can follow us on social media. You can send in your questions for Richard Scrushy at info@scrushionbusiness.com. And if you are somebody who is starting a business, if you are somebody who is looking to grow a business, maybe even take a business public, Richard is happy to answer your questions. And Richard, I'll give you the final word.
Oh, I think that's right, and that's we appreciate people hanging in there with us, the ones that are continue to view and continue to send us emails and just make really good comments on Facebook, Instagram, TikTok, wherever we might be out there in social media talking about what we're doing, and we're going to try and kick that up to another level coming soon in the future. We've just been talking about a lot of different things, and we got a lot more to come. So we appreciate you viewing. Hope you have a great day.
We will see you all next week. Thank you.